Joining us now to take a look at whether or not this rally has legs into 25 is Bolvin Wealth Management Group President Gina Bolvin. Gina, good to see you. Give us your outlook for year end and into the new year.
Well, Maria, like you said, it's been a great year. The S&P 500 is up about 60% in 2 years. So we don't think we're going to see we don't think we're going to see 20%, 25% on the S&P. But that doesn't mean it can't be a good year for stocks. I think what's so noteworthy about this year is that we really saw the market broaden out. We had, coming into the year, our favorite sector was communication services, was up 41%, but yet consumer discretionary was up 32%, industrials, value stocks did well, like industrials and also financials, and we expect to see this into 2025. I do expect the market to post maybe 8 to 10% gains, and it really could be better than that. One of the reasons is just earnings. Fundamentals are strong. S&P 500 earnings estimates are 8 to 10% for next year. We're starting to see the gap between value stocks and the Mag 7 narrow. So it's really been the Magnificent Seven that has been driving the market. And those earnings are decelerating, but the rest of the market, the 493 stocks, their earnings are accelerating.
Yeah,
so
I mean,
we do think it'll be...
Earnings likely to get a boost from all of these new policies coming in, deregulation, extending of the tax cuts, all positive for profits and American business. I'm wondering if small cap stocks get an edge in that scenario, given they're largely domestic based.
You know, we have a neutral rating right now towards small cap stocks. They are interest rate sensitive, and they could not do as well. They've had a pretty good year so far. They've been a long-term underperformer. We think one of the risks to 2025 is that the market has to readjust its expectations on rate cuts. And that's what we saw this year, too. Coming into this year, we thought the market would have 6 or 7 rate cuts. We've only had 2. And we think the market may have to readjust its expectations for rate cuts in 2025 as well. And small caps are interest rate sensitive. So we think they make sense in a diversified portfolio, but we're not overweighting them.
Yeah, I think it's a good point that you make in terms of really where the impact is in 2025. I mean, interest rates right now are hovering around 4.3% on the 10-year, ahead of the Fed's meeting next week. We'll get that final Federal Reserve policy meeting of 2024 next Tuesday and Wednesday. And the futures market is pricing in a 95% chance that the Fed cuts rates by 25 basis points on December 18th. Futures traders anticipating at least 2 rate cuts next year, Gina. But you have to wonder if, in fact, the plan stays as is, given that Trump has growth as a priority. And if you start seeing things get hotter and earnings start getting stronger, does the Fed have to rethink that? You don't want to be cutting rates in a growth story while things are doing well, right?
And that's what we saw this year, and the market really handled that well. Look, Maria, I'd rather take less interest rate cuts because of strong economic growth than a lot of rate cuts because we're tilting towards a recession. So I think that's really good news for the market. And you're right, the Fed's going to cut. I'm going to watch and see what the SEP, the Summary of Economic Projections, say and what the Fed is predicting for next year. But I think they're going to remain data dependent. You know, we saw this week, the labor market claims are going up. The unemployment went up, but it's really consistent with the slowdown and not necessarily that we're heading into a recession or we're falling off a cliff.
Yeah. Carol Roth, how do you see it? Jump in here.
Yeah, I just had a quick question for Gina on valuation. Buffett indicator, valuation to GDP is hitting an all-time high last week of 2 times. Is there any concern you have, Gina, that we're just too overvalued, or are we in a totally different era now?
A little bit of both. I think that valuations are overstretched, but history tells us valuations can remain overstretched, and momentum kind of begets momentum. That being said, I would expect a good 10% correction, and I say bring it on. I think it'll be fast and furious. There's $7 trillion of cash on the sidelines, and I think there's a lot of money that will come back into the market. I think it'll be a good, healthy correction. But you are right. We've been waiting it all year. We did see in August, after the yen carry trade, we had an 8.5% correction. But I think this healthy correction should come, and it may come sooner than you think. We'll see what the Fed says next week. It could be a hawkish cut.
Yep. Certainly that'll be the big event of the week. Gina, good to see you this morning. Thank you. Have a great weekend.
Thank you.
Gina Bolvin.
Merry Christmas.
And to you, Merry Christmas. Your morning mover this morning is Broadcom. Stock is up in the pre-market. The chip maker